Time to welcome our market master for the day, Andrew Holland, CEO of Ambit Investment Advisors, now joins in. Andrew, hi, good morning. The last couple of months really have gone as per your wishes, really. You were out of the market in October when there was that correction, and you were almost all in the month of November. What's your call now? Are you still expecting the Nifty to move towards 9,000 by budget? That was your call 2 months back?
Yeah, still expecting that. We feel that if the government can continue with its momentum of reforms and push through some of the bills through Parliament, then this will give the market its momentum, or keep the momentum going up until the budget. I just hope that the reform process continues, because I wouldn't like to see that we're all betting on the budget, proposals. Kind of making sure that India continues to grow at the pace we're expecting going forward. So I hope it's not becoming such a big event that people start betting on it, because that would be a little bit worrisome. But at the moment, still thinking 9,000 on Nifty by the time we get to the budget.
Okay. Andrew, hi, morning. We were speaking with your colleague a couple of days ago, and he was telling us about the fact that Ambit has put out a 36,000 Sensex target by March of 2016. What, in your sense, is the trajectory that the market will see till then? What would be the sectors that would actually lead it to that level if we get there?
Yeah, you see, India is a very simple story. It's a domestic growth story. So it will be across all sectors. And our view is that it's an earnings story. India is all about operational gearing, and as operational gearing kicks in, you'll see earnings really start to move forward very, very quickly. So 20% growth in earnings cannot be ruled out going forward for the next 2 to 3 years. So I could easily see an index target of, in 2 to 3 years' time of 45, 46,000 for the Sensex. So that's an easy thing. We're sticking to our mega supply theme. I mean, I know Prime Minister Modi's got made in India, but we think it's who supplied to India is going to be the real call, and that's where we're focusing our efforts. I know today is interest rate day and RBI, and we're expecting a 50 basis points cut in the first quarter. Maybe we'll see something today, who knows. But over the next two years or so, we're expecting 250 to 300 basis points cut in interest rates, and that's what will lead the next leg of the rally, because obviously that will help all the indebted companies and also the banking sector to lead the market. So it's going to be various sectors over the next 1 to 2 years which will lead, but underlying all of that will be this mega supply theme which we're playing out.
Okay, so since we're talking about interest rate and policy, Andrew, let's talk about banks, because that's one area you have been overweight on. But you're more overweight on private banks compared to PSU banks. But the last 1 or 2 months, we have seen a big rally in PSU banks. What's your call now on this entire space, and would you look to add your long positions, or would you look to book some profit in the banking space now?
No, we've become a little bit more constructive towards the banks. PSU banks, I said this before to you, Anuj, is that I'm not overly convinced on PSU banks yet. I think they'll be beneficiaries, obviously, of that lower interest rate regime. If 250 to 300 basis points over the next few years, that will help obviously all the PSU banks move forward. That said, in market rallies like we've had in the banking sector, we like to kind of rent them rather than own them. So we're not convinced that we need to own these stocks yet, but obviously, when markets has its momentum and certainly the rally in the banking sector, then we don't mind renting them in the short term and then take some profits as markets ease.
Amidst all this talk of cyclicality, Andrew, the one theme that has rallied beautifully in the last 6 months is the FMCG theme, especially with names like HUL hitting record highs. What do you do with a space like this now?
Yeah, again, I'm not convinced I want to be owning this sector. I mean, they will rally. I mean, the market's rallying, and you will expect them to be performers in that. But, you know, will I see the earnings, you know, per share double over the next 2 years? I don't think so. I mean, the rally, obviously, for a lot of FMCG companies has been the lower oil prices and the input prices. But, you know, if you take history in the past, what they tend to do is not really take that to their bottom line, but increase advertising to try and get market share. So they spend the margins, or the better margins that they have in increasing advertising, and that obviously doesn't flow then through to the bottom line. So it's okay. I don't mind the sector as a whole, but I think there's more action in other areas, you know, where you can actually play the supply theme, which will play out over the next 2 to 3 years.
Andrew, let's talk about the oil and gas sector, because that's one area where you had both short positions and long positions, and my sense is, looking at your portfolio, that the trades would have gone in your favor. But from now on, how would you approach both the upstream and the downstream companies, especially, you know, stocks like ONGC, where we've seen quite a bit of underperformance?
Yeah, I don't think you'll have that continued underperformance. I think oil prices are still heading southwards. I think we're going to see a demand problem from China. I'm not of the view that it's a supply problem in the world. I think it's a demand problem from China. So I think we'll see you know, both NYMEX and crude continue to head southwards. We might have a short rally in the very short term, but that would be a bit more of a dead cat bounce. So I don't want to play the oil upstream or downstream at the moment. What I want to do is play the suppliers to the industry. So if India is going to spend $25 billion on supplying, or building gas pipeline around the country, I want to find those manufacturers of the gas pipes rather than the owners of the gas pipes at the moment. So that's where you're going to get the bigger upturn or return in your portfolio, is identifying those stocks.
So what is your expectation from today's RBI policy itself, Andrew, and will it have any bearing on the market if the Reserve Bank governor does not cut rates?
I think if it doesn't cut rates, you know, it's just really, it's when rather than if. You know, our view is the first quarter of the calendar year 2015. So if it does, great. I mean, that will keep the market momentum going. I don't think I'll be hugely disappointed if it doesn't. In fact, you know, given what's happening globally in terms of currency markets, you know, I suspect you might want just to keep on hold for a little bit longer, because, you know, what I'm seeing and what worries me globally is that, you know, all the central banks are having their own policies, and it's mainly to depreciate the currency to kickstart their exports, and we've just seen that recently in China as well. So, you know, everyone's exporting deflation, so for sure that interest rates aren't going up anywhere in the world very quickly, and in fact you could have negative interest rates in the US and Europe very soon, along with Japan, and that will cause its own problems in the currency market. So, you know, being on hold wouldn't be a bad thing. You know, we can see that there's a demand problem or demand slowdown from China, which is still to play through in the market. So globally I'm a little bit more nervous than I am for India, but unfortunately when global markets turn, India can't hide from that.
Indeed. Let's talk about global markets then, Andrew, in the scenario, because in November you had painted a picture for January 2015. You know, you had said, imagine dollar yen at 120, dollar euro at 120, NYMEX at 65, and demand shock from China. 3 of those 4 have already played out, you know, except the China bit. So would you still expect that to happen in January, a 5 to 10% global sell-off? And in that case, in the near term, would Indian markets also get nervous?
Yeah, I think so. I mean, you know, it's always difficult to get the timing correct on this, but we think January might be when we all kind of wake up and think about what's going to happen in 2015, and China would, I'm sure analysts are now looking at their forecast for GDP growth, and I think Once they do that, we might start to see some downgrades to GDP forecasts. And I don't think that the markets of the world are expecting a China slowdown. So if that was to happen, it could be a shock to all of us, and we could see easily a sell-off similar to what we saw in kind of late September, October, where markets globally fell 6%. So anywhere between 5 to 10%. Unfortunately, India won't be able to withstand that either. So we could see equally a similar type of fall in our markets. But that, to my mind, would be the opportunity to load up portfolios ahead of the budget. Well, I still expect to see markets towards 9,000 on the Nifty, but it will be a shock, and I think that's what markets are a little bit complacent about at the moment. What's happening in China? They're trying to work out where the problems are. I know, unfortunately, transparency in China is so difficult to work out that it's going to come as a shock rather than it's going to. We can see it all as being predicted by the government there. So where does that kind of leave us? Well, when we all kind of come out of this, then and usually it's very quickly. India ticks two boxes. One, if you want yield, obviously interest rates are very high here, and bond yields are 8%, and growth, and India ticks the boxes on both. So I think we'll get flows back very quickly to India, because it is the one true domestic growth story which is playing out and will play out for the next 3 to 5 years.
All right, so then one final question. Since you did mention that you're not convinced about PSU banks in your long-term portfolio, what are the stocks and sectors that you're convinced about now that one can still hold in their portfolio?
So it's all around the mega supply theme. So it's across all sectors. It's a multi-sector, multi-year and multi-market cap. So it can go from cyclical through to defensives, depending on where we're seeing the growth and the supply side advantages for each of those companies. So it is across all sectors. Obviously, we're more in the early cyclical sectors than we are late cyclicals at the moment. So that's where we're keeping our investments in the very short to medium term.
Okay, Andrew, before we thank you, things are looking up for Manchester United again, right? Fourth in the table.
Fourth in the table, yeah. I'm smiling more than usually today after that, and hopefully tonight we'll consolidate that fourth position.
All right, all you Man U fans just know how to rub salt on the wounds of the Arsenal fans, don't you, Anuj?
Indeed. For a lot of Manchester United fans, nothing pleases more than seeing Manchester United ahead of Arsenal.
Okay, well, our time will come. Every dog has its day, as they say. Thanks so much for joining us, Andrew, and we'll see you in the evening at our Investor Summit. So we hope that's a crackling one as expected. So we'll see you later this evening. That's the word coming in from Ambit. As you saw on the flash, they have quite an aggressive target. They expect the Sensex to hit more than 40,000, but over the next 3 to 4 years. So they're extremely bullish on the Indian markets over the longer term.